As stated in the PCAOB and US GAAP Auditing Standards, the auditor is required to plan and perform audit procedures to obtain sufficient, appropriate audit evidence to provide a reasonable basis for the audit opinion.
So, how does the auditor know how much evidence is enough evidence?
Well, my dear Watson, you may have learned in previous courses that the auditor does not have to provide assurance that the financial statements are 100% correct, or absolute assurance. Instead, the auditor is required to provide reasonable assurance that the financial statements are free from material misstatement. Reasonable assurance is a high amount of assurance, but not 100%. Based on this fact, the auditor is not required to test every transaction that comprises the financial statements. So, we know the answer is not 100%.
So, the answer must lie in uncovering what sufficient and appropriate mean.
Upon investigating the standards, I can see that sufficiency of audit evidence is defined as the measure of the quantity of audit evidence. In looking closer, I see that the quantity of audit evidence is affected by two things. Firstly, the risk of material misstatement, which applies in a financial statement audit, or the risk associated with the control, which applies to audits of internal controls over financial reporting. It says here that as risk increases, the amount of evidence needed also increases.
That makes sense. So, if a significant risk was identified, and that risk related to a specific assertion for an account balance, such as revenue, then this account would require more audit evidence than an area that does not have a significant risk. What is the second thing that impacts the quantity of audit evidence?
The quality of the audit evidence obtained. It stands to reason that as the quality of the evidence increases, the need for additional corroborating evidence decreases.
That also makes sense. Some may even call it elementary. So, what about appropriateness? How do the standards define that term?
Let's see. Looks like it is the measure of the quality of the audit evidence. In other words, its relevance and reliability. Evidence must be both relevant and reliable for the auditor to rely upon it to support his or her conclusions. We're off to a great start, Watson. Let's see what else we can uncover about audit evidence by looking at the different forms and sources from which audit evidence originates.